Hello, my dear friends. Good evening to each and everyone. Today we learn about how to account the transactions relating to tax, particularly in case of private limited companies and public companies and listed companies. We try to learn this from practical point of view. Okay. Now let me share the screen. Okay. I hope all of you able to look at the screen. Yes. Okay. Now let's start. So what happens? Let's try to learn this through example. Okay. Yes. Now what happens? So this topic comes under tax accounting. This topic comes under tax accounting. Okay. So what is tax accounting? Regarding the taxation entries, regarding the transaction relating to tax in the books of accounts. Okay. Without violating the accounting principles, without violating the Indian generally accepted accounting principles. Okay. Now see XYZ Limited is having the below transaction in the financial year 23-24. Okay. Financial year 23-24. So in India, we follow basically financial year. Okay. It starts from 1st April of the current year and ends on 31st March of the next year. Okay. So financial year 23-24 means it starts on 1st April of 2023, ends on 31st March of 2024. Okay. So in tax, we call this thing as previous year. In tax, we call this financial year as previous year. Okay. So in taxation terms, financial year is nothing but previous year. Okay. So previous year means is financial year simply plus income earning year. Earning year. Income earning year. Okay. Now there is one more term called for suppose here how much of the profit the company has earned. Taxable income as per Income Tax Act 1961 is 100 lakh. That means as per taxable profit is 100 lakhs that has been earned by the company in the financial year 23-24. Okay. So how much they earn? 100 lakhs. Okay. On 100 lakh, when they pay tax, they pay tax after closing the books of accounts. When they close the books of accounts, 31st March 2024, they close the books of accounts. When they pay the tax, only after, then only we will get the accurate information, right? Only after closing the books of accounts, then only we will get the accurate information about the profit, then only we can able to pay the taxes, right? So that's why generally we pay the taxes, generally we pay the taxes in the next year. Okay. Next year, that means 24-25 year. Okay. This year is called as assessment year. Okay. This year is called as assessment year. Why we need to call this as assessment year? Because this year, in this year, we are assessing the profits and calculate the taxes. That's why it is called as assessment year. So simply the conclusion point is for 23-24 financial year, we pay tax in 24-25, which is called as assessment year. Okay. Assessment year is next to the financial year or next to the previous year. Okay. Fine. That is the takeaway point. Okay. Now what happens? What is the first transaction? Paid the advance tax of 15,000 rupees in the financial year. Okay. The first transaction is advance tax transactions. Advance tax transaction. Okay. So what is this advance tax, sir? If you ask me, advance tax is again the concept of relating to Income Tax Act. Okay. So as per Income Tax Act 1961, any person, okay, you and me, our company, okay, you, me, any company, any partnership firm, any person, okay, or any SSC. Any assessee. Okay. Assessee means the person who pays the tax. If his tax liability, if his total tax liability is greater than 10,000 rupees, if it is greater than 10,000 rupees, then that particular person should pay the advance tax. Then the particular person should pay the advance tax. Okay, clear? Yes, very much clear. Fine, no issues. Now what happens? This advance tax XYZ Limited is paying. XYZ Limited is paying the advance tax. How much it is paying? 15 lakhs. Okay. So why it is called as advance tax, sir? Because as we just discussed, as we just seen, okay. So we pay the tax only after closing the books. That means we pay the tax after the closing of books means next year. So, but we are paying this year only. We are paying in the usually we need to pay the tax in the assessment year 24-25. Okay, but we are paying in the financial year or the previous year 23-24. Okay, that's why it is paying. We are paying in advance. Okay, we are paying as you earn, as you earn, as you pay, as you earn, as you pay. That's why it is called as advance tax. That's why it is called as advance tax. Okay, fine. Now, how much the company has paid? Advance tax of 15 lakhs for the financial year the company has been paid. So what is the entry for that? Journal entry. Journal entries in the books of XYZ Limited. Okay, journal entries in the books of XYZ Limited. Okay. So what is the entry for advance tax? Advance tax account debit to bank account credit. Advance tax account debit to bank account credit. Clear? So now here what happens? Now this advance tax, which I am not supposed to, which I am supposed to pay the tax next year, but I am paying today itself. That's why it is called as, I am calling this as according to accrual concept of accounting or according to Indian generally accepted accounting principles. I am calling this as asset. Okay. When you can call something as asset means, okay, when you get future economic benefits and you have control over it, then you can call that as asset. Okay, when you have future economic benefits and also at the same time you should have control over it. Okay, so now the advance tax which I paid, okay, so to call it as asset I should satisfy two conditions. One thing is I should have control. Okay, I should have control. Second thing is future economic benefits I should get it. Okay, through advance tax, how I get control means that advance tax, whatever I have paid, that will reflect in my 26 AS. Form 26 AS, that will be in my name. Okay, that will be in my name. Okay, if it is in my name, I will be having control. So I got a control. So how I get future economic benefits? I get future economic benefits. Me, how I will get means today I am paying. That means tomorrow I no need to pay. Okay, it's reducing my future tax liability. So I am getting the benefit. That's why I'm calling as asset. So the entry would be advance tax account debit to bank account. The advance tax is an asset. It will stay in balance sheet. Okay. Now, so these entries are happening in which year? Yes, absolutely. Financial year 23-24. It is happening in the financial year 23-24. You have to understand it. Okay. So the general entry is being advance tax for the financial year 23-24 has been paid. Okay, has been paid. Okay, this is the first entry. Clear? Yes. Now, what is the second entry? XYZ Limited has provided the service 50 lakh to RAM. TDS has been deducted by service receiver RAM 5 lakh rupees at the rate of 10% for the financial year. Okay, fantastic. What is the second entry? Second entry is Okay. XYZ Limited is there. Ram is there. Okay. XYZ Limited provides XYZ Limited provides services to Ram. How much is the service value? 50 lakh. And the Ram, while making the payments, he paid only 45 lakhs. Remaining 5 lakh he has deducted as tax. That is called as tax deducted at source. This is one more concept in Income Tax Act 1961. So that concept is at source, the person who is responsible to make the payment, he has to deduct it and pay to government. This 5 lakh will be paid to government in the name of XYZ Limited. Okay. So now what happens when I am providing the services? What is the entry? Ram account debit 45 lakhs. I need to, as per Income Tax Act, I need to recognize the TDS. I need to, the person who makes the payment has to deduct the TDS payment or book entry, whichever is earlier. Okay. Ram has to deduct the TDS payment at the time of payment to XYZ Limited or at the time of writing the entry into the books of accounts, whichever is earlier. Since Ram has entered, see, even though I have provided this on credit basis, okay, Ram would have entered this in his accounting software. Okay. So now I am also writing this as Ram account. I will get only 45 lakhs from Ram now because 5 lakhs he will pay to government, right? In my name. Okay. In my name. Okay. So that is my money. That is my money. In fact, okay. Ram account debit 45 lakhs. Then TDS receivable account. See, that is my money now. TDS receivable account debit 5 lakhs to sale of services or professional services. Sale of services account credit 50 lakhs. Clear? Okay. I am writing the narration being the services have been provided to Mr. Ram and TDS receivable entry has also been has also been recognized in books of accounts. This is the entry. So here I would like to ask you one question. Here I would like to ask you one question. This, what is this TDS receivable? Ram is a debtor. I know Ram is a debtor or accounts receivable, whatever it is. Okay. So Ram is a debtor. TDS receivable account debit. What is this? Whether it is asset or expense or liability, what is this? Yes, this is asset. Because same concept, advanced tax. Because this 5 lakh also will go to my 26AS, Form 26AS in income tax website. You know, that 5 lakh also I need to be receivable. Okay, that 5 lakh also will reduce my future tax liability. That 5 lakhs also will be there in my name. So I am also calling this as asset. Just like how we have derived in the above discussion, we have also derived here also. Okay. So this is also asset. Okay. This sale of services, this is a income. Clear? Yes, fantastic. Now what happens? The two entries are over. Very good. Now what happens? Tax rate, taxable income. Okay. What is this taxable income? Very much surprising. I am listening it first time. What is this taxable income? I'm listening it first time. What is this? So the taxable income, First of all, let me tell you, taxable income is not equal to the income. It's nothing but taxable profit. Okay. Taxable profit is not equal to the profit which you are seeing in the annual return of the financial statements. Finance statements which are available in annual return. So taxable income is not the accounting profit. What you are seeing in the annual return, what you are seeing in the financial statements of annual return, that profit is different. This profit is different. Okay. So you will write the journal entries. You will prepare the profit and loss account. You will prepare the balance sheet. You might have prepared all these things. Okay, in your 11th class, 12th class, or BCom. Okay, that is called as accounting profit. That is called as accounting profit. Okay, this accounting profit you get based on Indian GAAP, based on Indian GAAP plus Companies Act rules, all those things. Okay, accounting standards, all those things you apply for this taxable income. What is this taxable income? Taxable income is just an adjustments to a refined version of accounting profit. Taxable profit is a adjusted adjusted accounting profit. We have to do some adjustments. Okay, first we will take accounting profit as a base. First we will take accounting profit as a base. Then we do some adjustments, plus or minus. Then this accounting profit will be turned into taxable profit. So what is the benefit of this taxable profit, sir? What is the benefit of this taxable profit, sir? The benefit of the taxable profit, the single benefit of the taxable profit is to find out the tax. Find out the tax. Okay. Sir, can't I apply the tax rate 30% on accounting profit, sir? No, sir. You cannot apply the tax rate directly on accounting profit, sir, because accounting profit has been used the rules of Companies Act, sir. But the tax rate which you derive, no, sir, that is given in Income Tax Act, sir. Okay, matching concept is violating, sir. So what happens, sir? You have to find out the taxable profit, sir. Okay. Now I have found the taxable profit. Okay. How much is the taxable profit in the question? 100 lakhs. Now this 30%, if I apply, I will get 30 lakhs. Okay. This 100 lakhs from Income Tax Act, this 30% also Income Tax Act. Okay. So this 30 lakhs is a income tax. Okay. This 30 lakhs is a income tax payable for the year. Income tax payable for the year. This 30 lakhs is the income tax payable for the year. It is needless to say that you have to pay income tax on profits if you are a company. Okay, fine. Now what happens? Since this 30 lakhs is a transaction. Okay, this 30 lakhs is a transaction which can be measured in money. That's why I need to account in it. That's why I need to account in the books. Very simple. So basically, why I am recording this as in the books, because this can be measured in money. I need to account in the books. That's it. Very simple. Okay, if I could have not measured this in money as per monetary concept, okay, if I as per the monetary principle of accounting or concept of accounting, if something cannot be measured in money, shouldn't be right in the books of accounts. But this tax is writing in can be measured in the books, can be measured in the money. That's why I'm writing it. So what is the entry for that? The entry for that is very simple. Income tax expense is an expense, no? Yes. Income tax expense P&L. Okay, this will go to profit and loss account. Account debit 30 lakhs to provision for income tax account credit 30 lakhs. Okay, provision for income tax account credit 30 lakhs. Okay, now let's try to understand this. So this income tax, this is an expense. Yes, this should go to profit and loss account. Okay, this provision for income tax, see, this is a liability. We need to pay it. Okay, the game is very simple. When you are passing these entries, yes, I am passing these entries in the financial year. In the financial year, so I am passing these entries in the financial year 23-24. Okay. So I have to follow the accrual principle of accounting. Okay. I have to follow the periodic concept, okay, of the accounting, because I have to write this whatever things relating to the particular year. Okay, I have to write in that year only. Okay, this income tax expense relating to which year? 23-24. As per periodic concept of accounting, I have to write in the 23-24 only. Okay. Yes, that's why I'm writing it. Okay. Now here what happens? This 30 lakhs, but when you will pay it, you will pay in the next year, because usually you will pay the income tax after, as we discussed in the starting of the discussion, as starting of the class. This year income tax, when you will pay the next year. Okay. Even though you pay next year, I have to create the accrual entry as per accrual concept of accounting. That's why I'm writing into my books of accounts. Okay. Yes. Now what happens? I'm writing that. Okay, fantastic. I have given reasons also why I'm writing in the books of accounts. Yes. Now here what happens? Now let's try to summarize what and all we have done. What are the assets we are having so far? We are having assets of advance tax. How much? 15 lakhs. We are having TDS receivable, 5 lakhs. We are having the liabilities, provision for income tax. Look at this. Provision for income tax. How much it is? 30 lakhs. Very clear. All these things are relating to which year? My dear friends, tell me. These things are relating to which year? 23-24. Okay, all these things are relating to which year? Year 23-24. Okay. So this advance tax, you have worked very hard and you have paid this advance tax. So these are assets, these are liabilities. Okay. Now what happens? Sorry. Now this year you have a liability to pay the income tax how much? 30 lakhs. Okay. Now this year you have already paid how much? 20 lakhs. Okay. Advance tax means instead of paying 30 lakhs, I paid 15 lakhs. Yes, no problem. I'm getting instead of me, my service receiver, Mr. Ram, has paid 5 lakh to government in my name. That is also my money. Okay. Now I am writing the set of entry. Most important set of entry. Okay. So total liability for the year, total income tax liability for the year is 30 lakhs. That means this year I have earned a 100 lakh rupees profit. Out of that 100 lakh rupees profit, I have to pay to government 30 lakh rupees. That is my income tax. Total 30 lakh. In that 30 lakh, in form of advance tax, I paid 15 lakhs. In form of TDS receivable, I paid 5 lakhs. Okay. Now let's try to set off that entry. What is that entry? Provision for income tax account debit to advance tax account credit to TDS receivable account credit. Okay. How much is the provision for? But unfortunately, yeah. How much I can write here? So we have advance tax. I am just 15 lakhs. TDS receivable 5 lakhs. So provision for income tax account debit how much? 20 lakhs. Okay. Fantastic. Yes. Clear or not? Yes. Now, now let's look at the balances. So advance tax account debit credit. First we paid to bank account. How much we have paid? 15 lakhs. Okay, again we have closed this entry by provision for income tax 15 lakhs. So this account has become closed. Zero account. Okay. So next, what is the one more ledger? TDS receivable account debit and credit to sales account. No, no. Yeah, to sales account. Yes, fantastic. Sale of services account 5 lakh by provision for income tax account 5 lakh. So this account also closed 5 lakh, 5 lakh. Okay. Now what is the last account? Provision for income tax account. Debit, credit by income tax expense account or profit and loss account. Anyway, that income tax expense has to go to profit and loss account only. See here, what I am trying to tell is this income tax expense will go to eventually it goes to profit and loss account. Okay, that I will show you. No worries. So this income tax expense, how much is the year's liability? 30 lakhs. Okay. Now out of this, two advance tax account 15 lakhs, two TDS receivable account 5 lakhs. Okay. Still this is having the balance of 10 lakhs, 30 lakhs, 30 lakhs, two balance carried down 10 lakhs. Okay. By balance brought down 10 lakhs. Okay. Fantastic. Yeah. This is the game altogether. Okay. Now, still we may require to pay 10 lakhs. Still we require to pay 10 lakh rupees because 20 lakhs we already paid. Okay. Now, these are the journal entries. Let me try to show these things in a profit and loss account. First, let me show the profit and loss account. Okay. In profit and loss account, we'll be having revenues. We'll be having total revenues. I'm just trying to fairly reasonably draw the take the format of schedule 3 total expenses. Okay, we'll be having the what is this profit before taxes. We don't have all those information. Okay, we don't have all those information. Then we have tax expenses. Under this we have income tax expense. Okay, how much is the income tax expense, my dear friends? Tell me each and everyone. How much is the income tax expense? Tell me. Yes, we already discussed that income tax expense for the financial year 23-24 is 30 lakhs. I have to write this. Yes. So this is the profit and loss account. Yeah, I do not have other informations. Okay. Now let me draw the balance sheet also. Balance sheet as on 31st March 2024. Okay. So here we have liabilities. Okay. We have liabilities. Okay. First, as you know that first you will get equities. Okay, let me reasonably draw it. Equity. Okay, then you will get non-current liabilities. Then we will be having current liabilities. Under current liabilities, you will get something called short-term provisions. There is something called short-term provisions. Under this, you have to write income tax net expense. That means out of 30 lakhs, this 30 lakh is there now out of this 30 lakhs. Out of this 30 lakhs, we paid 20 lakhs. Okay. So remaining how much? Income tax payable. Income tax payable how much? 10 lakhs. That's it. Okay. So this 10 lakhs will be shown here. Okay. And let me tell you, and tell me, you have to tell me this answer. How much will be shown in cash flow statement? How much will be shown in cash flow statement? Tell me. Profit and loss account. Okay. Income tax expense will be, we know that profit before taxes, we have profit before taxes, then we have what is this income tax expense, then we'll be having deferred tax. Okay, deferred tax expense or income. Okay, after this you will get profit after tax. We don't have all this information, but this is the format. So this you will get profit after tax here also. So our main focus is here you will get 30 lakhs, here you will get 10 lakhs. Okay, now we completed two main components of the financial statement. The third components of financial statements is cash flow statement. Cash flow statement. Okay, in this cash flow statement You have paid income taxes, no? Income taxes paid. How much you have paid? Tell me. How much you have paid? Yes, I have paid 20 lakhs. I have paid only 20 lakhs. So, how much is advance tax in form of advance tax? 15 lakhs. In form of TDS receivable, I have paid 5 lakhs. Okay, total 20 lakhs I have paid it. Okay, there is no doubt in the total 20 lakhs I have paid it. Okay, so this, as you everyone knows, it cash flow from operating activities. So under this cash flow from operating activities, you will get income taxes paid. Okay, everyone knows this format. Okay, and we also having cash flow from investing activities, and we also know having the cash flow from financing activities. All those things are there. Okay, which is not part of our discussion. Okay, so under the operating activities, you paid income taxes 20 lakhs. Okay, now I have one more question. Now I have one more question. Okay, now you what is the liability, income tax liability as on 31st March 2024? What is the liability? Liability means which you have not paid. Okay, I'll give you 2 seconds to think it. The liability is very clear, 10 lakhs. The liability is 10 lakhs. When you will pay this liability I will pay after 31st March 2024. Very simple. I will pay after 31st March 2024. Okay. So maybe in which year? Not maybe. Should be in which year? Financial year 24-25. Should be in which year? Financial year 24-25. Okay. So what is the entry at the time in the financial year 24? What is the entry? Okay. Income tax payable or provision for income tax, whatever it is. Income tax payable or provision for income tax. Provision for income tax. Account debit. How much? 10 lakhs to bank account. Bank account credit how much? 10 lakh. Okay, this is the entry in the next year. Okay, so what is the fee? Income tax payable relating to financial year 23-24 have been paid, have been paid in the financial year 24-25, have been paid in the financial year 25. Okay, clear? Yes. So this is all about the tax accounting concept. So in this concept, we have seen, you know, how to record the transactions relating to tax practically in the company's books of accounts. Okay. Yes. And I also, wherever possibility exists, I have given reasoning also for the same. Thank you very much.